one more thing. Steel and aluminum tariffs are now in effect. What trading opportunities might copper present next? Starting June 4th, the Trump administration is set to raise tariffs on steel and aluminum to 50%, which could just be the appetizer in a broader metals trade war. In the coming months, copper and other critical metals may also be subjected to tariffs of up to 50%. So, what could this mean? While consumer costs in the US may spike, savvy investors could uncover arbitrage opportunities. Let's break down how this metals trade war might play out, and what it means for your trading strategy. At the center of this issue is Section 232, a powerful trade mechanism that allows the U.S. government to impose tariffs on imports under the justification of national security. Investigations are now underway at a rapid pace, with full-scale tariffs possibly rolling out by Q3 2025. Targeting a wider range of base and strategic metals. So how might the market respond? Let's start with the U.S. domestic impact. Tariffs will likely push up the cost of imported metals, inflating input costs for U.S. industries such as automotive and construction. These rising costs could squeeze margins and impact corporate earnings. But here's the twist, this may also open a backdoor for traders. Why? Because U.S. metal prices may start diverging from global benchmarks, whether through exchange-traded prices or physical premiums. The widening gap offers room for arbitrage, buy low elsewhere, sell high in the U.S. and capture the spread. Now, let's talk global markets, especially copper. Copper is entering a vulnerable phase. Why? Because speculative bullish bets are heavily concentrated. Investors have been piling into long positions in anticipation of higher prices. But here's the issue, much of the recent copper demand was driven by precautionary stockpiling ahead of the tariff decisions. Once those decisions are finalized, that front-loaded demand may vanish, leading to a sharp drop in buying activity, and prices could quickly come under pressure. Add to that a globally softening macroeconomic backdrop, and there's a strong likelihood that copper prices may trend lower into Q3 2025. Of course, early positioning carries risks, so trade cautiously. This is Ultima Markets. We'll see you next week.